So let's talk a little bit about the stock market. This is one of the things we cover at our events, and it's been real volatile here of late. And again, this is something that we talk about on our radio show on Your Money Matters each and every week. And again, you can tune into that as well. But let's talk about what's happened in the market from 94 to 2000. The market was up 284%. And then 2000 to 03, the dot-com crash happened. That market dropped 49%. 03 to 10 of 07, the market increased 108%. Then we had the Lehman Brothers collapse, Bear Stearns, Countrywide Mortgage, etc. And that market plummeted. And that market dropped 59%. Okay, and we talked about the mortgage crisis. That was $550 billion that brought our economy to a halt. And if the Fed didn't step in, we'd probably be back in the Great Depression, which is where my dad grew up in. But again, we look at the overall pension liability we talked about. We talk about at events. We're at unfunded pension liability and public pensions is over $4 trillion. Again, $550 billion versus $4 trillion, folks. You need to understand what's happening to the pension plans out there. But overall, as far as the market, that market dropped 59%. And obviously, Trump got elected and the market was going up, until, beginning of 2019 or 18, and the market went down, and then summertime came, market was coming back up. Now what's happened? The market's starting to drop again, continuing to drop, okay? You can get into the whole trade thing with China, you can get interest rates increasing, you can get into gasoline prices, being low, etc. But the bottom line of it is we want to show people how we can actively manage your 401k. But again, the concern, as I've been telling people, you don't want to be overly aggressive. If you have a 30-year working career, you got all this time, okay? But now all of a sudden, if I'm getting ready to retire and I'm 1 to 2 years away from retirement, okay, I can't afford, now if this is my retirement window, I can't afford to lose half my 401k, okay, or a third of it. Let's say you have $300,000 invested in the market, and if you lost a third, that's $100,000. It's not monopoly money anymore, folks. That's real money. That's going to be income where you're going to need to access at retirement. We're going to talk about some of the other things. Again, you don't have to be 59 and a half in order to retire, folks. We can show you how to actively manage your 401k. And when you retire, if you retire at 55, we can show you how you can take distributions from your 401k penalty free. And again, it has to be through the 401k. And this is not a 72T calculation where that's restrictive. This allows you to access how much you want when you need it from the 401k penalty free. But how can we actively manage your 401k? This is what we get into is what we call brokerage link. And what brokerage link, a lot of companies are offering this. A lot of associates we work with, but brokerage link allows us to actively manage 50% of your 401k. Now we're going to go through a risk profile, what we call Risk Pro. And what Risk Pro allows us to do, software that we have to basically understand what risk you're willing to take. And you wouldn't believe how many people we sit down with prior to the correction that were way, way too aggressive, and we pared them back. We got them more conservative based off their overall needs, based off of how they scored. So again, they didn't lose as much. Again, we're not saying people aren't down, but they're not losing as much, and that's what's important. In a down market is not to be too aggressive, because if we got 1 or 2 years, again, we don't want this $300,000 to be worth $100,000, okay? So we can manage half of it, but what brokerage link allows us to do is we use our institutional team where we can actively manage the 401k, and we're a tactical manager, okay? And what that means is we can move money from stocks to bonds, okay? And we can go 70-30 either direction from stocks to bonds, okay? So as this market's changing, as this market's dropping right here, our institutional team will move money out of stocks into bonds, okay? Again, giving you a lot more options. When you look at your traditional 401k, you're gonna have a lot of target date funds, okay? And let's call a target date fund 2025, 2030. A lot of people we work with are in these funds. And then what you're going to find is you roughly have about 70% in stocks, 30% in bonds. And then every month it's going to be 70-30, 70-30, 70-30. So there's really not a change there. And these are what we call buy and hold, okay? Buy and hold is great when you think about the market going up, right? We all love when the market's going up. But what happens when the market's going down? You're riding that roller coaster, okay? So buy and hold's only good in an up market, not in a down market. Whereas with brokerage link, with our institutional team, we can actively manage your 401k, give you other options, the Pacific Financial Group, we can get into Meter, JP Morgan, MFS, PIMCO on the institutional side, where we can bring in institutional money managers inside your 401k plan. It's like opening a window, okay, where we can actively manage the 401k. Now we can only do half. That's the limit that Honda basically put on that. Other companies, we can do 100% depending on the company that you work for. But the bottom line of it is we'll get you into the right mix on the core side of your 401k. But any associate at any age can take advantage of this, okay? And again, we're helping people in their 20s, 30s, 40s, as obviously 50s and 60s as well, actively manage their 401k. And we help a lot of associates, helping them take the first steps in preparing for retirement. What's my situation going to look like? You know, Mike, I've put a lot in my 401k, or maybe I don't have enough. You know, how much more should I be putting into? These are a lot of great questions that we help go through with you when you schedule a time to meet with us. Now, again, Brokerage Link is available for anyone, but if you're 59 and a half, okay, there's a provision inside the 401k plan of what they call an in-service transfer, or what we refer to as an IST. And this allows you to basically take 90% of your 401k, and we just did several of these not too long ago with a lot of clients, where you can move 90% of your 401k, and you can move this into your own IRA while you're still working at the company. Maybe you got 6 months, maybe you got a year, 2 years before retirement, that's fine. But we can now actively manage it much more efficiently than where it was at before. So what an in-service transfer allows you to do is do a tax-free rollover, okay, into your own IRA. And we usually typically use TD Ameritrade, okay, to actively manage you know, the 401k. We use the institutional side of that. But this gives you a lot more flexibility. But again, once you're 59 and a half, you have this ability to move that 401k over into your own IRA. Now the remaining 10%, you get that once you retire. You can remove the remainder. Obviously, the company like Fidelity or Schwab or whoever the plan administrator, so he doesn't get to keep that money. When you retire, you can move the rest of it. But in-service transfer is definitely an option. We work with a lot of people because, again, people want to protect their hard-earned money. They don't want this situation where I got 300,000, this market keeps going down, 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 and I've just lost 100,000. And again, this is one of the areas of concerns that we discuss, you know, going forward, about protecting your 401k so it can produce the income that you need in retirement. And again, if you want to learn more, go to thepensiongroup.com/events to attend one of our upcoming events. Or if you want to get Retire from Honda Financially Free, our new book that's out on Amazon, or you can go to retirefromhonda.com.